Yo, what is going on YouTube? I am Jerem here. As you guys can see up on the screen, today I want to talk a little bit about Bed Bath & Beyond because man, did this stock have a bad day. I mean, you can see it right here, down 22% during the trading day today. This is ticker symbol BBBY for Bed Bath & Beyond, obviously the retailer that I'm sure most people are familiar with. This thing closed yesterday at $22.20. It opened today at $16.06, and intraday, this thing kind of bounced back a little bit. It was up 7.5% from open to close, but man, it opened low and it closed low. This was a rough day, and anyone involved with this stock obviously has been feeling it. This is on a day where the SPY didn't do great. Obviously, it was down 1.2%, so overall kind of a bad day for the market, but still being down 22%, that's something extra going on there. So in this video today, we're going to be talking about what exactly is going on, why Bed Bath & Beyond is crashing so hard so fast, and maybe what the future has in store for the stock and company as well. So definitely drop a like if you guys do enjoy this video. I would appreciate it so much. Subscribe to stay up to date on all my latest content, and consider checking out the first link in the description below if you want to get a free stock just for signing up with Robinhood. With that being said, let's get right into this. So Bed Bath & Beyond, right now a $1.8 billion market cap company. Obviously, not absolutely massive, not gigantic, not crazy big, but the brand name is obviously has a ton of, it's something that people are very, very aware of. The brand awareness is huge with Bed Bath & Beyond. They have a ton of locations. It's a big American company. It's famous. And it's been an interesting, couple of years now for Bed Bath & Beyond. Obviously, they were a company that got hit by the pandemic pretty hard, going from $12 all the way down to $3.94, but honestly, they've been able to rebound really, really well from then. Pre-pandemic, they were sitting at $15, $16, $17, and the fact that a 20% crash today has them, still above what they were doing in early 2020, that's kind of a big deal. They've seen some good strides. They had some good gains, some good run up here. Obviously, so even though things have gone, bad, I think if you zoom out a little bit, the last year or two has actually still been pretty good for Bed Bath & Beyond overall. But when we do take a look at what actually happened with them today, we have this article from CNN Business talking about customers abandoned Bed Bath & Beyond last month. The stock has tumbled 30%. Obviously a very, very tough day. But what happened? So, shares of Bed Bath & Beyond plunged nearly 30% early trading Thursday after the retailer revealed that foot traffic slowed significantly in August, pummeling its second quarter earnings. Their CEO did release that the chain's sales were solid in June, but then nosedived in the following 2 months because of unexpected external disruptive forces. Part of this was the growing spread of COVID, and part of this was ongoing supply chain challenges. Obviously, those supply chain challenges are some things we've heard some other companies are kind of dealing with. Things are expensive to ship around, to get this huge infrastructure, to get this whole, supply chain. Prices are up. Shipping is expensive. Shipping is, there's a ton of delays and a ton of price hikes and all this stuff. And it definitely hurts your bottom line. You make less money, you spend more money. It makes it very, very tough to do business for a lot of companies. Obviously, BBY is feeling this one. BBBY is feeling this. And obviously, COVID, we all know it's out there. It's still going on. It hasn't gone away yet. But they did say the Delta variant hurt sales in several large states, including Texas, Florida, and California. They account for a substantial portion of the company's revenue. Obviously, no shock there. The supply chain problems that ravaged multiple industries over the past year and a half intensified in August. They described the disruption as unprecedented and said that increasing inflation impacted sales and gross margin. That led to a much higher supply prices than they had anticipated, swinging the company to a $73 million loss across all its brands. Sales at the flagship stores fell 4%. Obviously, none of this is good news for BBBY. Triton remains confident that in the company's multi-year transformation that includes creating new private labels and remodeling stores. Their new flagship and location in New York City, which opened in July, has been exceeding expectations so far. At least they are saying they are in the midst of remodeling 450 stores, which is going to cost $250 million. So obviously, it's not great to have sales going down and to be losing money at a time where you're already, dumping $250 million into a bunch of remodels and everything. But if you think that is going to help growth in the future, obviously it could still be a sound investment. We'll kind of have to see how that plays out. But there is obviously some positive thinking left, in the company, and the CEO still is remaining confident in what they have going on in the future. They've been hit with falling sales and declining foot traffic in recent years as shoppers have defected to competitors such as Target, Amazon, all that stuff. But again, they've kind of had a good year, and they are exceeding expectations in New York City. They are remodeling a bunch of these stores. They're closing some of their underperforming stores. Like it says here, they're closing 200 underperforming stores. And once the supply chain stuff gets figured out, this isn't going to be the future forever. Supply chains aren't always going to be backed up. They're not permanently going to be this expensive. There could be a light at the end of the tunnel. So, while some people see Bed Bath & Beyond as like kind of a dying retail brand, and they're putting all this money into all these stores, and it's still not going to work out, they're still going to be this dying retailer. I totally get that, and I understand that side of things, and, you probably want to stay away from BBBY. But there is some people out there who are going to believe in the long-term success and the vision that they have going on. They're closing their underperforming stores. They're opening new big flagship stores that so far are overperforming expectations. They're putting a bunch of money into remodeling, and there might be some light at the end of the tunnel. So even though the stock dropped 20+% today, for some people, this is going to be an awesome opportunity to buy the dip and get this stock at a 20% discount, and just get even bigger gains if and when this thing eventually blows up in the future. So, kind of take a look at what Bed Bath & Beyond has going on. Take a look at their plans and see what you think for yourself, because this could be, for some people, potentially a really, really big, really, really exciting opportunity. You don't ever love to see 20% down days unless you're a long-term investor that absolutely believes in the long-term prospects of that company. Then you love to see 20% down days. So dive into it a little further, and make your decision from there. But that is pretty much it for this video today, guys. Definitely drop a like if you did enjoy it. I would appreciate it so much. Leave a comment down below. Let me know what you think about BBBY. I would love to hear your guys' thoughts and opinions. Subscribe to stay up to date on all my latest content. Hopefully catch you guys in the next one. But until then, peace.